Everyone, welcome back to my channels. If you have not, please don't forget to like and subscribe, and also click that bell button so that you can get all my new video. In this video, I'm gonna kind of show you exactly how you can make $1 million. In fact, more than $1 million, even if you make a modest money. The thing is, the stock market is slow and steady process. It's not a get rich quick scheme, right? A lot of people's wanted to put $100 and they want to take out 20,000, 40,000. They want to make $1 million, they want to make 100,000 with 1,000. If it was that easy, everybody will be millionaire and billionaire. Again, you can make tremendous amount of money, but you need to have a right mindset and right tools. So in this video, I'm going to talk about, again, I preach a lot about long-term investment, and this is also a long-term investment strategy, how to do that. As Warren Buffett has said famously, the stock market is a device for transferring money from the impatient to the patient. I could not agree more. If you are impatient, if you just want quick, probably this is not for, or you have to be very, very skillful, which very few people are. There are people who make $1 million in a month or even a week. I've seen that. There are. I mean, I have made a bunch of money in the weeks too, but that does not happen often. That's sometimes everybody gambles once in a while, but you should only do 1 or 2% of your portfolio, very little amount, right? Those are the money which you can afford to lose, but in the long term, you should not put every money in weekly calls or things like that. You will lose in the long run. It's a casino like options. So, but you can make money in options too. It's not that you cannot make, but you need to have right tools. But this topic, this today I'm talking about, is not about option, but it's about the value investment, stocks, how to invest, ETF and funds like that, right? So basically we can talk about investing in a index fund. So it has been found that most of the people who invest in stocks, most of the people, they do not perform well. They cannot beat the SPY. So what is the SPY? SPY is an index fund which track the S&P 500 companies. So that's it, very simple. So basically, by investing in the SPI, you are investing all the major S&P 500 company. You are investing in Apple's, you are investing a lot of those company, right? Tesla is not there yet, but you are investing in a major US company. Microsoft, Apple, and so you don't. The problem with Google is 1,000, so you cannot buy one share, but you can buy SPY, and if Google's value increases 2, 3, or fourfold, your SPY value also appreciates. So that's how the index fund. It's just the collection. The SPY somebody manage for you, but it has all the stocks which are moving. And the other thing is there's hundreds of ETF. You don't just have to buy SPY. I mean, you can buy Vanguard. Vanguard is one of the best index fund, in the sense they have a very low cost and one of the best return too. So the index fund, to manage them, it costs them. You do not have to worry. You just trade index fund as a stock. So basically for you, you'll be buying or selling SPY, right? SPY right now is to 339. Last time it was 338, 339. So we are pretty much I think we broke all-time high for a little bit, then we kind of corrected, but we are right there. So and the thing is there's tons of index fund, and there's for every category. You gotta get the index fund for banks, or consumer discretionary, or tech companies. QQQ, it's a tech index fund, so you can do that. But the thing is, if you try to pick an individual, you may hit a jackpot, you may get a lucky, but it's extremely hard. In the long run, you will probably lose. Again, I'm not saying don't invest in speculative, but that should be your minimum, right? For 70% of your portfolio, you should always do in the reliable index fund. So and for 30, you can have individual stock and a speculative company. Let's say DocuSign, Tesla. I mean, Tesla is a great company, I love that. But if you're putting Tesla 100%, that's a gambling, right? It may work out, but it may not work out too. So it's kind of boom and bust, and for your long term, you probably don't want to do that. And if you want to do really growth, right? Vogue, is really amazing. It's like a Vanguard index with the growth company. They have their certain criteria. What are the growth company? So they will have basically Square, Tesla. I don't know if Tesla is there, but something like Square or Doku and things like that who are growing rapidly. Probably they have some certain criteria that growth need to be year over year. Growth need to be certain percentage. You can look it up, but if you look at this, right, this is a daily, let's say a weekly. So um, in 16 they were 109. They're like almost double from 16, so 4 year doubles, right? That's pretty impressive. If you go back more, it's 1 month. So I think they just started in 2011, but they literally started 54, so fourfold from 2011. That's amazing, right? So this is one of the I think one of the best returns in the Vanguard. So yeah, so index funds are a great way to invest, and I'm going to show you in calculator exactly how much you can make if you just invest like $500 each month for 30 years, and we'll go over that. So let's keep it 1 day chart. So, and the other thing I wanted to talk about was what's the best index fund to invest. uh, if history is any indications, I would say that Berkshire is the best performing. So this is the chart. Like this is from the Berkshire Hathaway, and they have an annual leader which you can go to their website, and it's really good. If you want to go through, you should go through it. This is 2019 annual letter, and each letter they will do is like they will compare the performance of Berkshire Hathaway with the S&P 500, including the dividend. So if you look at the history, Berkshire Hathaway started in 1965. You have all the from 1965 till 2019, and if you look at that, their total annual return compounded annually is 20.3. That's impressive, right? S&P 10, they're like 20, almost double the S&P. And if you look at the overall gain, that's 2,744,000%. So look at that. With the 20% annually, that becomes that much a difference. Whereas SPY was only 19,700, which is impressive, which is a lot, but still look at that, right? That's so if history is any indication, let's see how much we can make with 20% annually for 30 years. Again, the stock market, you are not looking, this is not looking you bought it today and you look at next week and oh shit, it's downer, right? It's a slow and steady progress, I mean process. So this is the investor.gov, and where you have a compound interest rate calculator. So you just put, so let's say like you start, let's say you are in 20s, right, or even 30s. So if you are 20s or even 30s, 30, 40, 50, 60. So if you are in 32, let's say, right, worst case probably you're 20, 25. So I mean, if you're making a decent money, like even I would say if you're making 25, 2500, which is pretty much not much, but even if you're making 25 3000, you should be able to save 500. If not, you probably need to look into your expenses, where you are making expenses, and probably need to cut it down and save at least 500. I think this is very important. And for a lot of the folks, you have actually IRA accounts and Roth. If you do that, your company will match. So you, I mean, it's better to put more, but company will get match, and also it's a interest free too. So that's pretty good. So let's look at that, right? So if you're like 20, so you could literally retire with this method 30, 40, 50. Or if you're 30, you could retire in 60 with $1 million, probably more. So let's look at that. So in this, so initial investment, you're putting $1,000. Monthly contribution, you're putting $500. Length of time in the years is 30 years. And estimated interest rate, which is the annual growth rate, is 20%. So if you compound frequency annually, because this is the 20%, so if you calculate it, it comes to amazing $7 million in 30 years. So if history, I mean history repeats, right? And he's not doing just 1 year. It's like you can say, oh, you did it 1 year, so you cannot, you. And if you look at his company, right, he had literally like most of his is in Apple, and Apple, I mean, I don't think you can beat Apple's. And if you look at Berkshire Hathaway, I mean, their stock is BRK, Berkshire Hathaway BRK. A, right? A is the, oh, so BRKB. So they have a two. So A, you need to be millionaire or billionaire, so otherwise you can't afford. But this is amazing. So they went up to 15, they kind of pulled back. So this is actually a pretty good deal, I think. Like even Berkshire Hathaway bought their own share for 5 billion or something last week only. So they were all-time high of 229 before that. And usually if you look at the history during the crash, they were kind of negative, but next year they had amazing returns. So I think this is pretty good. I mean, I would be happy if they go like 75, but nobody can time the market exactly, but you could literally dollar cost average and get some of those. So I think they're at pretty good price point. I don't know how much they pull back. If you create a trend line from here, yeah, yeah. If this trend line kind of acts as a support, that would be nice. And they come like 190 area, I would be so happy. Yeah, if they could come like 90, 95. Let's see how they did a little bit of pullback. But again, this is not a technical video, so we'll move. But yeah, so if history is any indications, I think that's definitely doable. And you can see, right, in 30 years you have a $7 million with merely putting $500. So how much you're putting is not much, I think. You literally, your total contribution is only 181,000. But look at that, this is the power of compounding. The whatever the value increases, it's compounding annually, 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 right? So that's the power of compounding. It's the eighth wonder of the world, I think. Newton or somebody said, but I could not agree more. So look at that. In the initial it's slow, 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 but as you go much, right, once you have 497, like 400, 500,000, your growth like it just goes exponentially, right? Like look at this, it just went up from like, so it's just 18, 19 years. And once you have that much, I mean, if you have, you can literally start with here, I guess it will be pretty quick. But yeah, this is amazing. Like you can literally go to this website and look into the table, like how much you're gonna total contribution this year one. Total contribution is 7,000 year two. And it kind of gives you details how gonna much you're gonna make it with this. And let's get conservative, right? Like what if maybe Warren Buffett kind of not as nowadays you have a lot of tech and whatever, so his value investment may not work. So let's say if he, even if he does 15%, right, that's pretty good, even really good. And even if you do this, you still make $2 million. That's pretty amazing, right? So even if it's do like 75% of what he's doing, let's do 12, let's do 12%. So with 12% too, you're still making like, so with it, even if you put in SPY, you are there, right? Within, even with like 10% return in SPY, you are $1 million. You are a millionaire in 30 years. So I think if you are not saving, you should start. You should make a long-term portfolio and make at least $500 every month. You should not worry about like whether it's an uptrend or downtrend. If it's downtrend, if you can afford, you should add more, right? That way you have a more nest egg. So I think that's a great strategy. And a lot of people even do. There's a famous three fund portfolio where you have Vanguard total stock market, international stock markets, and bond, and which is the in the percentage. You can look it up yourself, like 42%, 18%, and 40%. This is great. And a lot of people's, I know people's like using this strategy got literally retired like in 10, 15 years, because we had the um, really good bull market from 2019. So I personally know a lot of people like who invested using this strategy and retired with the 1-2 million nest egg. And I was kind of looking at so Vanguard, you can look into, they have tons and tons of ETFs. For example, you can go Russell's 1000 growth ETF, when S&P 500 growth, S&P 500 like ETF VOO. And you can look in there like what's their return. Like this is doing 16%, this is doing 16%, this is 14%, 13%, 13%. Pretty amazing, right? So you don't, I mean, if you don't want, you don't have to invest in Berkshire. You have a lot of options, but you should look into this index fund rather than individual or penny stocks and lose all. Again, there's nothing wrong with like maybe doing your research and investing in some. That's okay. You can always do that. But if you wanna do build wealth in a long term, you should always invest in this index fund. Yeah, that's it for today. If you have any question or comment, please do write the comments and I will answer them. And yeah, till then, see ya, and don't forget to like and subscribe. Thank you.